Hey everyone, if you've been trying to work on your credit and you have barely been seeing any results, you need to go ahead and take a look at the workshop that I just opened up that is currently free so that you can learn where you went wrong while you were trying to work on your credit. During that lesson, you'll learn the 4 don'ts when it comes to working on your credit, the mistakes people make when writing dispute letters, why you shouldn't only dispute with the credit bureaus, and also the accounts that people waste time disputing. Not to mention, you'll get to see real results from a customer who used my methods and they were able to get their credit straightened out and bought a brand new home within 7 months. So go ahead and sign up for that training today. The link is going to be down in the bio. And while you're trying to work on your credit, you have to see all 3 of your credit reports and scores. And My Score IQ, a company that I use for myself and for all of my customers, has a $1 7-day trial so you can see your credit reports and scores so you can know where you stand, because you can't work on your credit without knowing what's going on all 3 reports. So please check out My Score IQ. The link to them is going to be down in the description as well. As you've already seen from the title of the live, and if you saw the post, the live is going to be about paying off charge-offs. I'm sorry, paying off collections. Now, this live is for all of those of you out there who know that direct deposit is about to hit with that refund check. Maybe it already hit, maybe it's about to hit this week, but you know that refund check is on the way. And you didn't use your cousin kids, you didn't use your auntie kids, and you didn't added them on there and got that refund check swelled up, and you about to cash out. This is for you, but it's not just for you. This is also for that person who just got a increase on their job, just got a raise, have more money coming in or something like that. And now that you're in a better financial situation, you're aiming to go out there and start paying off things so that you can try to be in a better position to get a home or get a car or whatever the issue may be. You just in a better situation now than you were before, and now you are ready to go ahead and start paying off those things, because of course that's what we were always told to do in order to get in a better credit situation, financial situation. Just pay off all your debts, pay off everything that you owe, and then it's going to lead you into the promised land of credit or your finances. And again, if you guys can hear me, let me see you guys put a thumbs up in the comments. Let me see you leave a 2 in the comments. That way I know you guys can actually hear me and I'm not just talking to myself. I want to make sure you guys are getting this information. And also, if you know anybody that will possibly benefit from this information, make sure you share this live so that other people can get this good information. If you know some people out there that are your followers, maybe trying to get a house or just trying to improve their credit, it would benefit anybody that's able to see this. So make sure that you don't be greedy and get all this good knowledge for yourself. Share it out there with a few other people. Now, when it comes to actually paying off all your debts, there's certain debts that if you pay them off, it may help you. There's certain things that if you pay it off, it won't help you. And I'm here today to identify what those things are and what you should do. And thank you for the thumbs up. I see those coming in. So I know I'm not talking to myself, but it's going to be important to identify what are the best actions to take with your money so that you are not wasting your money that you get in. Because not all of us do it, but you know, some people, as soon as they come into some money, they define a new expense. They go, get a brand new car, and then all that freed up money that they got is now gone because they got a new car payment. Or they go and they just buy a bunch of crazy stuff, go get some clothes, just unnecessary stuff that you may have just wanted throughout the year, and you got a chance to get it now. So, you go ahead and cash out, use all your money on that. But some people also, like I said, they're ready to get in that better financial situation. So they go ahead and they try to pay off all their debts thinking that they're doing the right thing. So just to clarify, what are going to be the good things to do and what are the bad things to do? And as you can already gather, collections is going to be the main thing that you don't want to do when it comes to paying off things to try to get improvement. Now, let me start off by telling you the things that you should pay off if you do have money. So what you will want to do is pay off open accounts first. The reason why you want to pay off open accounts is because they won't have a negative effect on your credit report. The reason why is because those accounts are still open. So they still have the ability to add good information to your credit report. And what do I mean by that? Basically, if you get behind on your car payment, or if you get behind on your credit card payment or a loan, and the account is still open, you're probably past due on it, maybe about a few months. But the thing is, once you pay the money to get caught up on it, you're doing two things. You are actually making sure that no more new late payments are added on your credit report, and you're also making sure that no more late payments are reported, and now you can have good payments reported on your credit report. And that's what's going to be the thing that's going to benefit your score. See, on a closed account, once you pay that off, you don't have the option for good payments to be reported on a credit report, and good payments are part of what increases the score. Also, a part of that is the balance that you owe compared to the original amount of the loan, or the original amount of or your credit limit on a credit card. So on an open account, those things can actually benefit your score. So on a closed account, those things won't benefit your score. So if you pay those type of accounts, those open accounts, you can eliminate the negative information that's there, or you can stop it from being added, and then you can continue to have more good stuff reported on your credit report. That's why you want to pay off those things first. Now, you want to do that also because if you don't, the account can close. And when the account closes, it goes into this category of accounts that'll still be on your credit report, damaging your score and hurting you for years at a time. And when you do come to the point where you are finally like, I'm going to pay this off, that's at the point that it's going to actually hurt you. And what would that be? That would be your collection accounts. It would also be your charge-offs. Some people don't know what the difference is. A charge-off is if you had a credit card with Wells Fargo, they close it, and Wells Fargo is still on your credit report showing that you owe money. That's a charge-off. Collection is Wells Fargo has been in charge-off status. They haven't received any money from you for, let's say, 6 months to a year. At that 6 months to a year time frame, they're probably going to pass it on to a third-party collection company like a Midland Funding or a Portfolio, a Cavalry. They have a whole bunch of different collection companies out there. But on your credit report, if you see a third-party company, usually a company that you don't know who they are, you've never heard of their name before, you don't remember doing business with them, that's a collection company. And those two closed accounts are the things that can hurt your credit score if you try to pay them off. Now, I'm pretty sure you're wondering, why. And if at any point in time while I'm doing this, you guys have any questions, feel free to ask questions. I don't mind answering any questions along the way. And at the end, I'll give you guys some time to ask some questions too. But, back to the point, when it comes to those closed accounts, they close on your credit report, which you may have heard closing a credit card, it'll drop your score, right? So if an account that is open closes on your credit report, whether it be a loan or a credit card, it can actually affect your credit score negatively. Mostly on credit cards, but it can happen on, loans, like I said, too. I've seen people pay off a loan, which is a good thing, a car loan, and then the next month on their credit report, they see their score drop. It is because of the loan being closed. So that tells you right there, because that's not an account that was just past due and went to charge off, and that's also not a collection, but the action of an account closing can hurt your credit score. But beyond that, the charge-offs and collections, they hurt your credit score when you pay them, because usually there has not been a certain level, there has not been any activity on those accounts in some while. And by activity, I mean a payment. And there are certain dates that show up on accounts on credit reports. And you may hear different things from different people. Whoever you may follow to get your information from may say something different. Or what you've been taught by other people may be different, but I'm just telling you what I've seen with my own eyes from going through hundreds of credit reports and seeing them on a month-to-month basis, because, I get to see a person's credit report when they first come to me with the accounts that are on there, and I've seen how things change from people paying off loans, a collection being added, a collection being taken off. So I've seen how these actions have affected their credit score firsthand, and not just for one person, for hundreds of people. So I can see what's the consistent things that happen when you do that. And what I found is, like I said, I had a person that came to me and I was working on their credit, they had a collection all of a sudden pop up on their credit report, right? So it had been a little while since I first started, so they kind of forgot the things that I told them in the beginning, what they should and shouldn't do. So this little $50 medical bill popped up on their credit report, and they had a sudden drop in their credit score, and they didn't know what it was. They asked me about it, and I saw that. So I was like, okay, the collection popped up, boom, that's what caused your score to drop. So, I, continue to go on to work with this person, and next thing I know, I end up getting another message from this person because they had Credit Karma, and they said that, hey, my score had dropped some more on the same credit bureau. And, I was wondering like how this score could drop because, Credit Karma updates every week, and the credit reports that we use through the process, it updates every 30 days. So, I was wondering what could have happened in between time that could have caused that issue. So I ended up looking at her credit report, seeing what happened, and I ended up finding out, hold up, I'm gonna look at that in a second, but I ended up finding out that she had paid off the $50 collection because he was like, oh, it's just a $50, collection. That's nothing major. I'll just go ahead and pay it. So she paid it, and her score dropped about 40 something points from her paying that little $50 collection account that she had. So, it's a negative effect when it hits, but if you pay it, it can do that. Sometimes it may do absolutely nothing. But the thing is, if you owe thousands of dollars or hundreds of dollars on collections and then you pay them and then absolutely nothing happens or your score drops, is it really, worth the money at that point? Let me see this question. How do I keep a furniture bill open when I'm making the last payment? Okay, so for that, when you have an account at a furniture store or a retail store, they usually give you revolving credit, a credit card. What's going to happen with that? After you have paid off the balance of it, it's going to stay open. But retail cards and furniture cards, the thing about them is that after so much time of no activity, maybe 6 months, maybe a year of no activity, like you've paid off the balance and you haven't bought anything else, they will automatically close the card. And in some places, they actually decrease your credit limit if you haven't had any activity, or if your credit score changes in the midst of you owning the card. Both of those things, them lowering the credit limit or them closing the credit card, can hurt your score. And it can drop it significantly. So those are things that you want to look out for with retail cards. That's why I tell people it's not always the best idea to get retail cards, because they can put you in debt because you gonna see those sales and you're gonna keep going back and spending more money than you need to spend. So, that's usually not a good thing to do. But, sometimes I realize, people just go and get them anyway. But that's why I don't usually recommend retail cards too often. So should we make payments to collections rather than paying it off in total? Okay, so if you make a payment to a collection, make payments on a collection balance that you owe, what's going to happen? It's the same thing. The action of making a payment on a collection, whether you're making small payments or whether you're making one large lump sum payment, it gives you the same effect. It's going to drop your score either way. The thing is, if you're making payments on it, the initial time you make that first payment, that's when you're going to see the initial drop. Or if nothing happens, you're going to see that initially when you first make that payment. Anything that's going to happen, you're going to see it when you make that first payment. But until you pay that thing off, it's still going to affect you the same way that it affected you when you made that first payment. So either you'll see a drop and it's going to stay there, or you're going to see no change and it's going to stay there until you're done paying it off. So by the time you've given them all that money, you've seen absolutely no benefit to your credit score at all. And I can tell you too, with charge-offs, it is guaranteed if that charge-off, like you haven't given them payments, it closes, and you haven't given them a payment for more than a year, and then you try to go make a payment with them, it's definitely going to drop your score. Like, without a doubt, it's going to drop your score because there hadn't been any payment activity on that account at all. And then all of a sudden, there's payment activity on a negative account. So it has a negative effect on your credit score, and your score will drop for sure. And I know most people don't know that because, you know, like I said, we're told as soon as you get some money, go pay off all your debts and all your problems will be solved. But it's not that simple. So what's the best way to handle a collection? So when it comes to collections, the very best way to handle them, to deal with them, and I'm going to add one other thing in there too, because some people think other than paying off collections, they might try to go do bankruptcy because they got a whole lot of debt and a whole lot of, collections out there. So they might try to go do bankruptcy and think bankruptcy is going to solve all of their problems. Let me say this about bankruptcy, and let me say this about paying off collections. That's something that most people think is going to happen that doesn't happen. A lot of people think when you pay off your collection, it's going to be removed from your credit report. It's not going to happen. It only gets removed if you have some type of agreement with them where they say they're going to remove it, but 9 times out of 10, they're not going to agree with you to remove it. They're going to get the money from you, and they may tell you some stuff to make you think they're going to remove it for you. But 9 times out of 10, they're not. There are some companies that will, but 9 times out of 10, that's not going to happen. And when it comes to the bankruptcy doesn't remove anything off of your credit report. The only thing bankruptcy does is pay off those collections and charge-offs. And like I said, it doesn't matter whether it's a bankruptcy paying off the accounts or you paying off the accounts. The bankruptcy is going to have the same effect as you paying it. If it's going to drop your score from you paying it, whether you do bankruptcy or not, it is the same thing. Your credit report doesn't really care about what you're doing per se. It only looks at certain actions. And if the action is paying it off, it's going to have the same effect. Most people don't know that. And let me answer the question about what's the best way to deal with collections. Because of what I just mentioned, the best way is to get it removed. There are more than 300 different consumer protection laws out there. Those laws are not available when you do a dispute online with Credit Karma. Those options are not available when you do a dispute on the credit bureau's websites, Experian, TransUnion, Equifax. If you go to their website and do a dispute, or if you call them, they don't give you the options that those laws give you. And those laws say various different things that can have an account removed from your credit report for a legal reason. And it could be them not having certain documents, or it could be you finding the error on your credit report. It's several different reasons that something can be removed off your credit report. Paying something off is not a legal reason for it to be removed. That's why they don't have to remove it after you pay them. But if you find a reason using one of those laws, that can help you get it removed. And like there's the Fair Debt Collection Practices Act, the Fair Credit Reporting Act. Those are the most commonly used ones by credit repair companies to try to get those things off your credit report. That's what I use, and that is the best way for you to try to deal with the collections, because if it gets removed, then that means that it's not there to affect your score. If the information isn't there, it's not calculated in the score. And if it's negative, of course, that's going to help you out in some kind of way. How many points you'll get, there's no way to tell, but you will see some type of increase. It's different for everybody because everybody's credit report is different. Some people have young reports, some people have old reports. So it just depends on what's going on with your credit report. And I think I missed a question too. Let me see if I can see. I know somebody asked something. Okay, should I pay DNB Bradstreet for starting business credit? Why is your social security number needed for business credit instead of EIN? Okay, now that's on a whole nother subject right there, but you don't have to pay Dun & Bradstreet to pay for your, to start establishing business credit. And for you guys who don't know what we're talking about, when you have a business that's legitimately set up with an EIN number, you filed your articles of incorporation, or all that stuff, your business can build credit in its name, just like you build credit in your name. But the thing is, the reason why you still need to use your social security number when you're trying to build credit for your EIN, and a EIN is like a social for us, but it's a social for your business, and that's what is connected to the credit that your business has. And the reason why you got to use your social is because when your business gets started, it's just like you when you're getting started with credit. You don't have any credit established, so nobody knows if they can trust you or not. Your credit score tells the lender if they can trust you or not, but based off your history. So if you don't have no history, you normally need a co-signer, or you have to go somebody that's going to give you high interest credit because they don't trust you yet. So with your business doesn't have anything established. You probably don't have income yet. They don't know if you're, solid at paying bills in the business. So you have to be the co-signer for your business. So that's why on most things they still have what's called a personal guarantee. And if you have to use your own social, that is a personal guarantee. But there are credit options for your business. It's called corporate credit. And with corporate credit, you can actually use your business's name and get credit, whether it be a credit card or certain credit at a vendor that you use. It's different things, but you need to try to be focused on building corporate credit. And you may have to start off doing business credit too, using your social, being a co-signer, until you get to the point, because the steps that you have to take in order to get there. Hopefully that answers your question. I want to buy a house within 2 years and want to clean up my debt. Okay, so if you want to buy a house in 2 years, and with the bankruptcy thing, just to add this in there too, when it comes to getting a house, most people want to get an FHA loan, which is the easier loan to obtain because they have lower requirements. If you try to get an FHA loan and you've done a bankruptcy, after Chapter 7, they make you wait 2 years before you can get a house if you file that. So not only will it not help your credit score if your issue is collections, it'll also keep you having to wait 2 years in order to get a house. And if you do a Chapter 13 instead of a Chapter 7, you have to wait like a year, I believe, after that before you can try to get a house. But if you want to clean up your debt and you want to get a house in 2 years, I can tell you that based on your credit, there are ways to get it done way quicker than 2 years, quicker than a year. But it just depends on what's going on with your credit. So, for one, if you don't have any credit cards or anything like that, you're missing out on a whole bunch of points. And if you're trying to get points, then having a credit card at a low balance will help get you there. If you have things like collections and charge-offs on your credit report, those are things that need to be dealt with in order for you to get your score where it needs to be. And also, mortgage lenders, it hurts you to have more than $2,000 in bad debt when you're trying to get a house. What is bad debt? Charge-offs and collections. So if you take the balances, all your charge-offs and collections on your credit reports, and you add them up, and it's more than $2,000, what's going to happen is you're going to end up getting less money for your house, because they add in a payment on that debt, and they take that away from your monthly income, so that affects your debt to income ratio. So you'll get less money for your house. Plus, the fact that you have that many collections and charge-offs on your credit report, that means they're affecting your score too. So that's something that needs to get knocked out in order for you to be in a better position to get the amount of money you want for your house, and in order to be able to, get the house. And as far as the score goes, most places want you to be at least at a 620 middle score, which means not the highest score, not the lowest score, whatever's in the middle. That's the score they use, and they usually want that to be at a 620. Now, some people will take lower than a 620, but you'll have to jump through more hoops to do that. So the first thing you want to do is get your credit report so that you can see what are your issues. Let's see. Can a collection be removed even if you owe? Yes, a collection can be removed even if you owe. The laws that are out there that can help a person remove accounts off of their credit report, they have nothing to do with what's owed on the, maybe errors with the balance, but you can owe money on a collection and it can still be removed from your credit report. It doesn't matter if you owe $5, and yeah, I've seen collections on reports like $5, even $1. But whether you owe $5 or whether you owe $1,000, the collection can be removed from your credit report, because those disputes using those laws, they are challenging the creditors or the collection company's right to be able to report the information on your credit report. Now, it doesn't get rid of the debt. The debt might still be out there unless the collection company just decides to drop it completely. However, it doesn't matter what you owe. You don't have to pay off a collection to see it removed from your credit report. You don't have to. Hopefully that answers that question. Okay, have you already spoken about credit cards to rebuild your score? Okay, I didn't really say anything about that, but credit cards to rebuild your score, when it comes to trying to rebuild your score, a lot of people usually end up going the wrong way. And they go the way that they've been told they should go, the way that most people go, which is the same thing that leads people to paying off their collections and charge-offs, and that's not the right way to go. So most of you want to go to your local credit union, or you want to go to your current bank that you bank with. And that is the foundation what you base your decision off of. Is that the right decision? Most cases it's not. And why? Because when it comes to credit cards and you having a low score and needing to build up credit, in most cases, you might feel like you have to go secure a card, but you don't necessarily have to do that. But one thing that people don't think about is you want to build up your credit on all 3 credit bureaus, especially if you're trying to get a house, because they check all 3. So you want to build up your credit on all 3 credit bureaus at the same time. So you need to find an account that's going to report to all 3 bureaus. Most credit unions only report to 1 or 2 bureaus because they have to pay. So the smaller the company, everyone that reports stuff on your credit report, they have to pay to do that. So the smaller the company, the less likely they're going to pay all 3 bureaus, to do that. So credit unions usually don't. There might be a few credit unions that do. And there's also your banks. Some smaller banks don't report to all 3 credit bureaus. But the bigger the bank, the more bureaus they may report to, but it's probably going to be harder for you to get approved. And the more places that you go to trying to get approved, the more inquiries you're racking up on your credit score, which can cause it to drop. It may drop only a little bit, but if you get too many, like a lot of inquiries over a short period of time, it can also hurt you on getting approved for things. So what you want to do is find a place that'll approve you for credit that has like guaranteed approval. And if you guys appreciating this information, please make sure you throw some likes in there, give me some comments, ask some questions, share this with people that may need this information on your page. But you want to go to people who are going to have guaranteed approval, or people that don't check your credit. Now you may be wondering, where are those places? Well, the link in the description that I have, Credit Cards for Bad Credit, has 3 options that you can use that are, one is unsecured, so you don't have to put down a deposit, and they work with people with lower scores, but you can still get declined. The second option on there is a secure card. Most places for secure cards at credit unions, it may be like $500 at the minimum that you can do. And other places like $300. This secure card option starts off at $200. So it's a lower cost option to get started, and they don't check your credit. There are some secure cards that check your credit. Like when I worked at Wells Fargo, I used to see people get denied when I was doing the application, and it was for a secure credit card. And you putting up your own money, so you think you're gonna get approved, but some places will still deny you. So the place that's listed on that on my link, they don't check your credit at all, so it's guaranteed approval, and it's a lower deposit. And there's another option on there, My Jewelers Club. And that option is a very good option. Most people don't like that one as much, and it's because they want a card where they can go spend money wherever they want to. But more than likely, that could be the reason why you're in trouble now. But besides that, it would be good for your credit to have this option, because you can only buy jewelry from this company's website. But it's stuff on there that, I'm not gonna lie to y'all not gonna really want. Y'all could, get it and give the jewelry items to somebody for Christmas that you don't like, and you do that with it. But you're not gonna go in debt with it, because you can only spend with it on that site. And they give you a $5,000 credit limit though. Now that's what really helps your credit score, that high credit limit. Because if you go get a $300 secure card and you spend $150 on it, you already at 50% utilization, and that can drop your score. But if you spend that same $150 on a $5,000 limit, I mean, your percentage is going to be under 5%. So that's going to actually end up not affecting your credit score at all. And all three of these options that I'm talking about, they report to all three credit bureaus. And the My Jewelers Club option is guaranteed approval, so you don't have to worry about getting approved. And it has a high credit limit, and you don't have to worry about going in debt. So, those are the three options that are listed on that link. Go ahead and check it out, and you might, choose whatever option you feel like is the best for you. But, just giving you some options so that you can be able to have some type of way to get started building credit. And then after that, once you see the benefit from that in your score, you can start getting regular credit accounts. Because, some people, they deny you just because you don't have a credit card. So you can't get a credit card until you get a credit card. So, it's like getting a job. You got to have experience you got to have manager experience to get a manager job, but you can't get a manager job without experience. You get what I'm saying? So anyway, that will give you an option that'll help you on all of those levels. Let's see, what's a good business credit card? Somebody just asked me that and I forgot what I told them, but I know, especially getting started, Capital One is one of them. They're good for getting started. They do report on your personal credit, so they have a personal guarantee, but they kind of easy to get approved with and, get you started on having some type of business credit. But once you, get a little more established, it might be easier to get one of those Amex cards. And Chase Inc., I think it is. They have a pretty good card as far as for business. Let me see what else we got here. And like I said, if you guys have any questions, feel free to ask. I'm just trying to see what other question we got here. Do you advise paying off credit card balance in full or just paying it down? So when it comes to that, and I've heard so many different things about paying off the credit card balance. I heard somebody say, if you make your payment, and then 2 weeks later come around and make another payment, then it's supposed to give your credit score a boost or something like that. Now, have y'all heard that before? But I've heard that before, and I can tell you that that's absolute nonsense right there. Like, when it comes to the credit card balance and how to deal with it, it's just really a matter of what you're trying to do. And again, if this information is good, you guys ask questions, give likes, hearts, share this information with anybody you know. But as far as, I forgot what the question was for a second. Oh, yeah. So when it comes to the balance, what you want to look at is, if you have a balance and you pay it off every month, that means that you're going to not have a payment eventually because you paid off the balance. And then, you would end up to just keep the card active, just keep on buying something and then paying off the balance. Now, it's not going to hurt you to not, pay it off though. So if you don't pay it off and you just make the payment, you're still going to help your score, but the payments I'm talking about are going to help your score. But the thing is, you're going to be paying more money in interest because the card cycles are usually like 25 to 30 days. If you still are holding a balance at that time, if you're still holding a balance, then they're going to charge you interest on that balance after that 25 to 30 days. So, if you hold a balance and you make the minimum payments, then you're going to be paying more money in interest. So that's going to be coming out of your pocket. So that's one thing to be mindful of. But as far as like affecting your credit score, neither one will affect your credit score. The only thing that affects your score with the card is going to be what the balance is compared to your credit limit, or it's going to be a matter of if you have late payments on that credit card. So those are the things that you want to look for in regards to that. That's what you want to look at when you're trying to figure out if you want to pay off your balance or if you want to just make the minimum payment. Other than that, it's not really much else that you should be looking at as far as how the card affects you. And I'm not seeing any more questions, so I guess everybody's already asked the questions that they have out there. But I do appreciate you guys for taking the time out to be with me this evening. This night, and learning about credit with me. Like I said, I do this for the sake of trying to make sure that other people out there who aren't knowledgeable about the stuff, or people that are being fed the wrong information, get correct information so that they can get from point A to point B a lot faster than they would with the information that most of us are given, left to rely on. Because I know it left me in a whole lot of bad situations in the past, and I just want to make sure other people don't end up in those same situations. Can you get late payments removed from your credit card? I'm asking all kind of questions. That's fine. Ask all whatever questions you got. I got an answer for it. So go ahead and throw them out there. And if you don't have a 700 credit score, you should be asking some questions too, because I know it's something you're trying to figure out. Don't be shy. But can you get late payments removed from your credit card? So here's the thing about that. As far as trying to get late payments removed from something like a dispute or something like that, that is usually not going to happen. You're not going to see a remove from that in most cases. Unless it's like a real legit situation that you have going on that caused you to be late, or you can find a real legit error, that may be being reported on your credit report. Now, there are some instances where they have some companies that have courtesies that they'll do for a person that's never been late and they've been a customer for years, or if a person has been in a certain disaster situation or something like that, they may remove a late payment because of reasons like that. But for the most part, companies used to do, like goodwill removals of late payments and stuff like that, but they really don't try to do those these days. Like, they're really stubborn about not doing that. And they'll hit you really quickly with we have to report accurate information. And they say that to you to make you feel a little bit guilty, because it's like, we doing what we're supposed to do legally. We have to report, but honestly, no company has to report anything on your credit report. It's totally optional. Like I told you, they have to pay to report stuff on your credit report. So putting stuff on there is optional. If they wanted to remove it, they can. But, of course, they don't want to do anything like that. Every time they make changes, they have to pay money to the bureaus too. Let me see what question that is. Is it true when paying minimum balance to always pay $5 more on a credit card? So when you're paying the minimum balance, you want to decide in your mind how much over that minimum payment you're going to make. You do need to make more than the minimum payment. And the reason for that is because the more you're paying the minimum payment, the longer you're going to be stuck paying on that balance, because they're adding interest on top of it every month. So it's more money that it's going to cost you in the long run. So when you add $5, an extra $5, $10, $20 on top of that minimum payment, you help and knock down your balance a lot quicker, so that you aren't, stuck paying a $100 balance for 5 years. You get what I'm saying? So it is always going to be beneficial to go ahead, and actually pay some type of extra amount. You just need to determine what that extra amount is going to be. You're trying to buy a house? I hear you now. If you follow these instructions, you'll be well on your way to doing that. But you just got to make sure you stay on top of your credit. You got to make sure that you are monitoring your credit every month, because stuff changes on your credit report every month. And people usually not watching their credit other than Credit Karma. And Credit Karma is free, and that's what everybody wants. Everybody wants to go to the free option. They don't want to pay money for stuff. But I get it. But at the same time, you don't get all 3 credit bureaus. And there's also some information on there that you may not see the way Credit Karma is set up. You have to go here and there to find information out. And I've had a lot of people to overlook accounts, and then when I do the credit consultation with them, when we use the credit reports that I use, they seeing stuff that they didn't see before. And then on Experian, we look at Experian too when we do the credit consultation, and people aren't seeing that on Credit Karma. And there's a whole bunch of accounts on Experian that they definitely didn't know was there, and it's more accounts on there sometimes than on the other credit bureau. And they like, where's all this stuff? And they would have, and I had one person, they would have went into the mortgage broker's office trying to get a house, and then they were thinking that they were ready based on what Credit Karma was saying, but then they didn't know there was a whole another bureau full of information out there that was hurting them, and it would have kept them from getting a house when they went into office, and would have been a wasted inquiry. But you got to check all three bureaus, and check your credit monthly, because you never know what's happening out there. Let me see. How do you know if a collection can be removed or not? Are there any that rarely come off? Which ones are more likely to be removed? So yes, there are some some collection companies that are harder to be removed than others. Now, you know, some people that work on credit, they don't necessarily pay attention to something like that. Like if a certain accounts are harder than others, they just go ahead and they just start, you know, shooting the shotgun at everything. But having knowledge of the things that are harder to deal with can help you better prepare for the process, so that you can know what you're dealing with, and know, you know, how much of a challenge it's going to be. But yeah, I can tell you, what is that one? Portfolio. They are one that that's a collection company that can be really hard. And you can never fully tell if a collection company can be removed or not. When you're sending out disputes using those laws, it's just like, you know, if you hired a lawyer. You can hire the best lawyer out there to defend you on whatever the charges whatever the charges are. And that lawyer is going to present the best case to get you off on those charges. But guess what? They still have to wait on the jury and the judge to make a decision. They present the best case, and, you know, they may have done all their background studies on everything, and, you know, just came with the information in the courtroom. But they still have to wait on the judge and jury to see what their decisions are. So when sending out disputes, same thing with that. I have to send out disputes. I have to see what the credit bureaus and the collection companies come back and say. And then that's when you find out if something is going to be removed or not. You never know ahead of time. But I do know some accounts are easier to deal with. Medical bills, easier to deal with. Cell phone bills, cable bills, those are easier to deal with. I've even seen some bills, some collection companies from apartment complexes. I've seen those be removed. Credit card companies, collections that are for credit card companies, those are usually a lot harder. And collections that are for loans, those are also a lot harder to be removed through the disputing method. So, you know, it's just a matter of knowing what you're dealing with and knowing how to approach it. That's how you can kind of gauge that when you're looking at your credit report. Let me see what we got here. And in a few, I'm going to wrap this up. Let me see. And if you guys can still hear me, make sure, let me see some more of those. I forgot, let me get some more of those thumbs up, and let me get some twos if you can hear me, so I can make sure. Can't hear well? Oh, hey, Nancy. I'm sorry you can't hear me, but yeah, Nancy, tell me if you can hear me now. Hopefully you can. Should I have had some removed? Oh, so I have had some removed from my, oh, that's moving a little too fast. Okay, so I have had some removed from my credit report. Will the home lender be able to see that they are removed, or will they just see the new score? Okay, so as far as that goes, currently the credit reports that lenders use, they can't see anything in the past. So they can only see what's on your credit report right now to this day. So if they pulled your credit report today, whatever's on your credit report today, that's what they'll see. If they were to, if something gets added to your credit report tomorrow, they won't see it. If something was on your credit report yesterday, it may just be me. I have it at 100%. Yeah, it may be something going on with the speaker or the computer. But I hope you can get that straightened out. Or you might want to go to the phone if you can to try to hear. But what I was saying? So when it comes to I forgot completely. Oh yeah. So if you had your credit report pulled today, and something was on your credit report yesterday, but it got removed yesterday, they are not going to see it today because there is no history there per se. There isn't any history record where it will show what was on your credit report. the only thing they can see is what's present. It looked like you asked something else. You see, thank you for all your help. I really appreciate your advice. It's no problem at all. That's what I'm here to do. I'm just here to give people the best direction to go in, because I know you're probably tired of being stuck in neutral financially. You know, you feel like you should be going somewhere, but you're not really moving nowhere. But, you know, this information hopefully help put you in drive. And I thank you for being here to catch this information. Like I said, make sure you share this information with anybody else that you feel like could use this information. They might be trying to get a house. You might have followers trying to, you know, get approved for a loan. They don't know where to start working on their credit. They're trying to get a business. They're trying to get investment properties. You know, make sure you share this information with everybody who you can. And I believe that is it for the questions. It seems like no one else has any questions going on. I hope this information was beneficial to you guys. You know, I love helping people any way I can. And like I said, don't forget, I have useful links in the bio, in the description of this live. There's a link on there for you to find some options to build up credit with credit cards, even if you have bad credit. There's some options. There's a link in there for an article that creditcard.com did with me. They interviewed me, asked me some questions on dealing with debt. What to do after you got into credit card debt. So that article is linked in the description too, so you can check that out. And again, you know, my name is Will Frazier, owner of Clean Slate Credit for 6 years, one of the highest rated credit repair companies in Alabama. And we just expanded to South Carolina, and we also help 17 other states. So, you know, we're not just limited to those states. So, you know, feel free to reach out to us for help. I also have a link for a $1 consultation. It's just $1 for your credit reports. And I do the consultation with you, and I'll tell you how to get from A to B with your credit. And if I can help you, of course, I'll tell you how I can help you. But, you know, during the consultation, I'll just let you know what can be done to get you straightened out. And if I can't help you, I'm not going to, you know, do anything to take your money other than the $1 you paid for the credit reports. You know, I'll tell you what you need to do, whether I can help you or not, so that you can get your life straightened out. That's what I'm all about. Oh yeah, Lisa, I'm glad that you were you know, gonna be getting on that today. I didn't even realize that was you in there. But I hope you got some useful something useful out of this information that I shared tonight too. Do you assist GA? No, I don't assist Georgia. Georgia has a very unique set of laws. Every state has different laws for credit repair companies. Most of them you have to have a license or a bond, or, you know, some other requirements that they may have. And in Georgia, the laws are just, well, it actually says that it's a misdemeanor to do credit repair in Georgia, but there's a way around that if you partner with the right people, lawyers, attorneys. So I am not set up to operate in Georgia right now, but I can still give you advice, but I can't do any actual credit repair in Georgia. So, well, I knew you were going to say no. Yeah, I'm sorry about that. I hate it too, because a lot of people reach out to me from Georgia, but, you know, I usually have to refer them out to someone else if they're in Georgia. But like I said, I can still give advice. But I also have a tool for people who are outside of my reach, and it is a do-it-yourself credit repair course. And with that do-it-yourself course, it's like a crash course. You can learn everything you need to know in an hour from a few videos, and they have 93 sample dispute letters in there, so that you can kind of get an idea of what you should be saying. And it's letters that can help you with almost any situation that you have, so you can get an idea of what to do. So what states do I assist? Honestly, I can't call them all out, but they are on my website. But Alabama, of course, South Carolina, Florida, Texas, New York, New Jersey, Michigan, and I know I'm forgetting some, but those are the ones that I can think of off the top of my head. But every state that I can help is listed on my website. So now at this point, it's getting kind of late, so I'm gonna go ahead and go. But I thank you guys for coming through. Hey Elle, how you doing? Good to see you in here. But yeah, like I said, it's getting kind of late. I'm in Eastern time zone, so I don't know where you guys at, but it's getting pretty late where I'm at, so I'm gonna go ahead and wrap this up until next time when I come on and give you guys some other great topics. And if there is anything that you would like to hear me cover in the future, make sure you leave a comment in this video, because I can go back and see the replay, and I can pick up on that, and I can know what you guys want to learn, and I can get that information to y'all the next time I go live. Job switching? No, I didn't see a question about switching jobs. What, could you restate that question for me? I'm sorry, I missed it. I tried to catch everything while I was scrolling through, but after I answer that question for you, then I'll go ahead and dip out. So go ahead and repost that question for me. I don't know how I missed that, but if it's about your job possibly checking your credit, I'm assuming that it might be in that regard. That might be what you're talking about, but let me just see what it is exactly. But while I'm waiting on you to say that, I'll just say that other reasons why a person will want to make sure that their credit is in good condition at all times is because your credit can not only get you denied for a loan, it can not only have you paying extra money for a house, a car, a credit card, but it can also stop money from coming into your house. And how can it do that? It can do that because a lot of jobs nowadays check your credit. A lot of the good paying jobs, even if you're in the military, they do security clearance checks, I believe, and they check your credit for that. So you might lose your military job because of your credit. So, if you're trying to get a job that has higher income, you can be denied that extra income coming into your household because your credit isn't where it needs to be. And of course, that's not something that you're going to be thinking about. And that by the time you do the interview, it's going to be a little bit too late at that point. But that's a reason why you would want to make sure that your credit is top notch at all times. My friend wanted to know if switching jobs affects a loan. Derek called. Oh, what's up, Derek? Good to see you up in here. I haven't been on in a while, man, but I caught a few years recently. Been so busy lately. But as far as switching jobs, so when it comes to that, it can affect you getting a loan. It affects you because lenders want to see your stability. I started a watch party for you live, so it may not have transferred over. Oh, that's cool. I appreciate that very much. Thank you. But to answer your question, they want to see stability. So they want to know that you have at least been in the same place for at least a year at most lenders. Even when you're trying to get a mortgage, they want to see that you've been in the same place, been consistent. Because if you're constantly, bouncing around, you've been at this place for 3 months, 6 months, then they feel like you're not stable. And if your living space isn't stable, more than likely your income isn't stable. So you might be reporting, you get this much income now, but you might not be getting that income later, which is why they also look at your employment stability too. And most places want to see that you've been at the same job and that you've been at the same living space for at least a year, most places. Now, there are some places that may not care about it as much, but most places at least want to see that, and they may deny you because they don't see that stability there. So hopefully that answers your question, because that's very important, and that's an aspect of getting a loan that most people overlook. Thank you, brother. I'm trying to give as much value as you out here. I swear you dispensing information almost every other day. Let me see. Do you help with removals? Yes, I do help with removals. Whenever I work on a person with their credit, I do a consultation with you. We go through everything on your credit report that is affecting you. We go through everything A to B. I tell you, this is what needs to happen with this. This is what needs to happen with that. I can help you with this. You're going to need to do this. So it's a twofold process. So it depends on stuff that you need to do and stuff that I need to do. And I work on the removal part. You would be working on the building credit part and anything else that is advised to you during that consultation. But yes, I do help with the removal part. because that can be the most challenging part, figuring out how to do that. But like I said, if you have the right person working on it, then you can see better success than if you were trying to do it yourself, because you can do it yourself, but you can defend yourself in court too. But a lawyer will probably do a little bit better than you in court. And same thing when it comes to your credit. You want to have an expert that has experience working on it to help you get to the results that you want a little bit faster than what you could on your own. But yeah, I believe looks like that's it for the questions. And if any of you guys, have any questions about credit, you want to reach out to me about doing a consultation, like I said, I have the link in the description here. Feel free to send me a message. I'll be glad to answer your questions, to talk to any of you guys about your issues, what's going on. Like I said, I'm looking to help families be able to purchase a home or do anything that they aspiring to do in finances, getting rental homes, investment homes, building wealth. I'm interested in helping any family that I can be able to be in a better position to be able to, leave money for their children's children, because I know that's what I'm trying to do. And hopefully y'all trying to do the same thing too.